Hello and welcome to another update video about the DXY. Well, the DXY did turn higher again and broke above immediate resistance. This means now that we have a push above immediate resistance, so above the ideal, actually the last ideal wave 2 resistance. So we want to talk about that in this video. I think it's getting more and more likely that it's following the yellow pathway. Those pivots eventually, they are designed to tell us when probabilities are shifting, and it's shifting definitely probabilities from the white count to the yellow one. I don't want to commit fully to the yellow one yet. First of all, let's talk about the two counts, but I think before really committing to the yellow count, I want to see how tomorrow the market opens, because yeah, this is critical now. I mean, if the price, if the DXY cannot sustain above that 78.6 retracement level, then it's likely white, but it would need to turn down really soon. Yeah. And let's talk about the two counts first, and then we can talk about the micro action. First of all, the idea is still that we are in a phase in which the DXY should go lower eventually, down in this C wave and into the low $90 region. However, for basically more than a year, the DXY has been very, very resistant and very stubborn and didn't really want to sell off. Now it's actually starting to go up a little bit more aggressively, and it's worth watching then this resistance area next. Now, in the white count, which is still the immediate bearish count, we have 5 waves down in what I count an A wave from the third wave top that formed a top around September 22. Then the idea was that this year could have been obviously a 3-wave move. Well, it was a 3-wave move. What you never know is this all of wave B. It's possible, still possible, that this was all of wave B, the top in October last year. And then we had a possible 5-wave move down. At least you can interpret it like that. It's not perfect, but possible leading diagonal. And then here, this could be a wave 2 to the upside, which might just be a little bit more aggressive than a wave 2 would normally be. And then we can get a third wave down off the C wave, then a 4 and a 5. And it might take us into the low $90 region, between specifically $92 and $94 more specifically. That's at least what I can see right now. Now, there are certain levels. The ideal level for a wave 2 that shouldn't really be broken is $105.87. This is 78.6 Fibonacci retracement. So that level is broken, however, and not a sustained break yet. Not a sustained break yet. Friday closed above it, but we haven't sustained really above it. I want to see how Monday opens. So if the price, or if the DXY pushes any higher than that and gets to the last year's high based on, the October high last year, well, the higher it goes, the more probabilities are shifting towards the yellow count. Already now, probabilities have shifted, because normally you would not expect a wave 2 to break above the 78.6 retracement. Now we can still keep the white count intact, but need to see some kind of a reaction. And the official invalidation point, and that's then really black and white, that's what Elliott wave offers us, pure, very, very objective invalidation points, where I could say now, okay, maybe could still be a wave 2. But I can't really go ahead with that anymore if there is a break above this October high at $107.40. So in that case, then we are moving into a larger B wave rally, which we can talk about now. It's the yellow wave count, in which case this B wave just extends. That's not unlikely, given that this B wave was quite shallow at the time. You might remember that it basically reached only, not even the 50% Fib level, or just about the 50% retracement. Now in this scenario, we have a larger A, B, C structure. There are different ways how you can actually label this, but it would be an A, B, C, and the C wave is unfolding right now. Very complex correction, that is. And we can also calculate some ideal targets for that C wave. I mean, the 100% extension level is already pointing to $107.10. I mean, see, that might not even if it's the yellow count, it might not even invalidate the white count fully. But likelihood would suggest, also looking at the microstructure, that we would push higher, possibly towards $109 or even $111. Okay, so the yellow count has to be considered as long as we don't break below the last swing low, and I go to the 4-hour chart now, I really want to see to confirm the white count further, or to have some it doesn't matter so much if it's the white or the yellow count now. Yeah, it's not so much about prediction. It's about, okay, which levels need to hold and break for each scenario. Now the probabilities for the white count increase again with a break below the last low at $103.86. But if we sustain above, well, the 78.6 retracement level at $105.87, then the yellow count will get more and more probable the higher we go. And the next resistance is, yeah, basically here around, around the October high, $107 to $108. It's definitely the next range to watch. Yeah, that should give you all the levels to watch for next week. Hope you enjoy the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.